Good afternoon and welcome to today's charts of the day. Wanted to start off taking a little bit more of an in-depth look at Amazon. Amazon has been one of the charts that has been a favorite of Stockwaves to chart and track, and certainly a darling of the market. But one that we have been tracking very closely since we really started Stockwaves back in 2013. It was one of the first articles that I ever wrote about on Seeking Alpha back here in August, looking for an extension to another high in the top of this larger intermediate wave 3, which was still inside a primary wave 3 that got a very nice extension from the 2016 lows. But back in that early article, I introduced a concept of evaluating some fundamental analysis, which is kind of rare for an Elliottician, in looking at the price to sales ratio and treating it as an oscillator and applying some Elliott Wave count to it to look for confirmation in our larger chart of price chart. So here we have, if we zoom out here on the Amazon chart, we see a large cycle degree wave 1 and wave 2 from its initial, shortly after it had that initial drop on the IPO into the 1997 lows, a strong initial move up that was rather impulsive, and then a nice corrective retrace to about 50% to 618% of that. So the red Fibonacci extensions here are our long-term price extension for that cycle degree wave 3. And we know that even if this were just a C wave, we're still closing in, we're in between the 1236 and the 1382, and we still are owed a fourth and a fifth wave inside whatever this is, but it's playing such great Fibonacci pinball, I'm more than happy to can still consider it a cycle degree wave 3. So when we zoom in a little bit more, we see that inside that cycle degree wave 3, which should minimally target the next larger fib extension in those reds, which is the 161.8% extension, which is at a roughly 73.50 price target for Amazon, 73.4682, based on the snapped values from the top of wave 1 and the top of wave 2 at cycle degree that we're looking at on that weekly chart. But in the shorter term, we are due, and I say shorter term, but I mean probably over the next year and a half or more, more of a primary degree wave 4. So that should mirror this first correction that we started when we started tracking this for stock waves back in 2014, which was just an intermediate degree correction. But when we look on the daily chart again, we see that took us from a high here in the 400s down to lows in the 282 region. So that was about a 30% correction, and that was 1 degree smaller than what we're looking for here. Now, Amazon does like to hold relatively high corrections based on Fibonacci extensions, and then does get even bigger extensions in the third. But even a relatively high extension can still easily take Amazon back down under 1,000. And in fact, that's where just at least the C wave of a possible larger A of that primary wave 4 targets. And from where we are right now, we see that's about a 43% correction down towards that targeted support. And from there, we could still get another B wave and a C wave, or we just start to extend lower towards the ideal level of support for this primary wave 4 I have is the 725, 726 region, which would be a 23.6% retrace, would take us down into the wave 2 region from this extended fifth. So that meets as well as the fan line support here, and then going from the 176 extension of the yellow Fibonacci extensions here, which are for primary wave 3, down to the 1382. So it'd still be a pretty high consolidation, and I know some people might hear, Amazon dropping under 1,000 and dropping all the way down to 726 and think that it's ludicrous to consider that a high consolidation. But for other charts, a normal fourth wave might easily come back all the way down into the same region as the fourth that we had back in 2014 at that smaller degree. And that would be a pretty massive correction. So we're actually being very conservative in terms of the magnitude of this correction at primary degree, with our targets of the 1000 region and then possibly extending down, whether it just extends straight from there after less of a bounce or gets the full B wave. But I wanted to go back and take a look at that price to sales ratio on Amazon and see what we had been looking at way back in 2014 and then what we've been following since then. So if you'll see back in 2014, we recognized that there was this, from the history prior to that, it seemed like any time Amazon got up into close to the 3 region, the 2.5 to 3 region, that was almost an extreme level for the for price to sales ratio. And then anytime it was down closer to the 1.5 level, that was an extreme low. And so, treating that as an oscillator similar to a MACD or a stochastic, then if you were looking for a completing Elliott Wave move into that 2.5 to 3 region, that was a good marker for a likely top. And if you saw corrective movement down in line with corrective movement in price action into the lower 2.0 to 1.5 region, then that was indicative of a bottoming pattern in the price to sales ratio and confirming what we were seeing in the actual Elliott Wave price structure. So here we can see our same count applied as 1, 2, 3, 4, 5 up in that parentheses 5. And again, here we can see 1, 2, 3, 4, 5, but you'll notice the third does not extend quite the same way. You have this stair-step pattern up, and then you have a move over, and that there's the corrections here, there's a lot of extra divergence, and you have to make some allowances when you're trying to apply an Elliott Wave structure into something that's not really a linear progressing pattern. But the more important thing is that this extended fifth wave of our primary wave 3 really extended the range substantially, taking us well past what was previously our extreme price level in the 250 to 3 region, all the way up towards 4.5. But since then, even though we came up pretty close to a nominal new high in our B wave bounce, we have some significant divergence here on that price to sales ratio that I think is very confirming, showing that this is continuing to weaken, even though price was managed to come all the way close to a prior high as that B wave in this corrective ABC bounce. So at the bare minimum, I would like to see somewhere around that 1000 region struck, as that could be the A wave, and maybe if it stretches a little bit below there, we can end up moving all of this primary wave 4 over. But in that, at least that, if the price to sales ratio stretches a little bit below 2.5 and gets closer to 2, then that might be kind of the new low region or normal, not quite as extreme as getting back down to 2 to 1.5. But that could be very indicative of at least a temporary bottom for a pretty nice bounce as the B wave, if not starting to show signs that it's not going to be a B wave and might actually be starting the primary wave 5 from a bottom in a little bit shorter time frame, only from that 1000 to 725 region. Now I wanted to move on and also take a look at a couple of other names using the same methodology, and wanted to go first and take a look at Microsoft, because I think Microsoft does have a very similar pattern to Amazon. It has a primary wave 2 low back here in 2011. Its primary wave 4 is much more in line, or its intermediate 4 of that primary 3 is much more in line with the early 2016 correction. Was running a little bit behind. This was the larger degree in the broad market in S&P and NASDAQ. And they got another 5 and a shallower consolidation for that intermediate 4. But then since June 2016, has gotten back on the same page with the rest of the market, in the camp of counts where the move off of the December low is much more in favor of being counted as the minor degree fifth to complete that intermediate degree wave 5 of the primary wave 3. Also a very, very extended move as far as the primary wave 3 is concerned that we have seen on a lot of NASDAQ charts, getting to the 3.236 extension. But when you look at it in terms of the intermediate wave 5 extensions, it's at a pretty exact 161.8 compared to the wave 1. So that does mean that the yellow fibs have gotten very, very extended, but it's at a more normal price level that we would see for that intermediate 5, and we can see a very nice clean 5 waves up inside that parentheses wave 5. And similar to Amazon, we're looking for an ABC move down in a primary wave 4, ideally coming just under 70 in Amazon, which is a pretty substantial correction as well. That is roughly 45% from where current price is. We certainly have not yet confirmed a top, and one could even count a fourth wave inside this fifth is holding support in the 119 region and getting one more push up towards 140 and maybe even extension beyond that towards 146. So it would need to take a pretty strong drop under the 119, 118 region for us to start to confirm that a top is in place and that we're in the A wave targeting down under 110 towards 105 region, and then stair-stepping down in that corrective primary wave 4 pattern. But if we jump over to that price to sales ratio on Microsoft, then we can see that as far as the actual price to sales ratio value, it is at a much, much higher value than Amazon is. But when we zoom in here, we see that it's been much, much higher in the past, different than Amazon. So when we zoom in here, hold on, just trying to get, there we go. So we zoom in after that large correction down into the low that we have both in price from a larger corrective move, where we started the move off of 2009 that we're counting as primary 1, primary 2, and now topping in primary 3 and due for primary wave 4. That similar to that in the price to sales ratio chart, we have the actual low that came in here at about that 2.5 region, an initial move up in line with primary wave 1, and a retrace that didn't make a lower low, so it held as a corrective retrace for the primary wave 2. And the interesting thing that I noticed here about this price to sales ratio chart is the structure inside this 3 could actually be an ABC move up for an A wave, and then a B wave, and then a strong C wave up for that primary wave 3, where the entire structure here could be part of a diagonal. And what that means is that we've noticed that the price to sales ratio for Microsoft here is significantly higher than that of Amazon, and Amazon is definitely at an extreme as far as Amazon's price goes. So that sets up potential for an even bigger drop as a wave 4, because we know that from Elliott Wave in a diagonal, the fourth wave can enter, and often does enter, into the price territory of primary wave 1. So that would have us looking for a low in price to sales ratio in the 5 to 4.5 region, coinciding with our ABC structure down for our primary wave 4 down into that ideal 80 to 70 region. And if we can see those in conjunction with each other, then that's going to start to give us a very high probability bottom, setting up for a longer term swing move that should last 5 to 7 years for that primary wave 5, taking it well beyond the current highs up towards the 200 level. Similarly, a couple of other charts that I wanted to look at with regard to the same structure, or not same structure, but the same methodology, was AMD. AMD has a very, very large correction that we're counting complete into the 2015 low, and from there has a very, very strong impulsive 5-wave move up. So we're counting this as just a new primary wave 1 off of 2015 in the start of a long-term move for AMD that is very, very bullish long-term. But in the shorter term, after we have 5 waves up in Elliott Wave, we are looking for a 3-wave retrace into Fibonacci retracement zone to set up for that stronger rally. So that means that we need to see an ABC move down, ideally to a minimum of the 10.6 level, which is a 38.2% retrace, and possibly a little bit deeper all the way down to the 5s. But that would be sending AMD up well over 100 over the next 5 to 7 years beyond that, and we think that this correction can be in line with most of the corrections that we see in the market and what we're looking for in Amazon and Microsoft as well. AMD is another name that did not make a higher high off of the December low. It counts as an ABC move up for this B wave, so we're looking for at least a C wave down towards the 14 to 12 region. And as we said with some of those other ones, if it stretches beyond that towards under 11, then it's possible we'll count that as all of the wave 2. But we could end up with just a B wave bounce from there. B wave's hiding under the fib labels here. I'll hide the fibs, and then you can see the B wave. So possible, though, that instead of starting the primary wave 2 from there, we just get a corrective B wave bounce, maybe on a short covering rally, and then extend down again into that lower 7.4 to 5 region, well into late 2020, and then starting the rally from there. But glancing at this in terms of the price to sales ratio, again, we see this very, very large A, B, and a C wave correction coming into the 2015 low, our strong impulsive move. And what's caught me was a little bit interesting here is that, one, you have a lot of divergence in the price to sales ratio, just like you might see on a MACD, as it's making its nominal new low into 2015 from the low that it made back in 2008. But also that this small wave 1 and wave 2 was so small in price action that it doesn't even show up in price to sales ratio because it didn't have time for quarterly earnings report to record that difference. And so the structure here looks more like an ABC move up. And because this looks more like an ABC move up into that, what we have is a current level of a price extreme on the way between 4.5 and 5, we can probably expect a little bit of a deeper retrace for that primary wave 2, which I think probably argues that maybe we're going to see that A wave and the B wave before we get the primary wave 2, and that this is only the smaller B of that parentheses A wave. But again, despite the strong move up from December, we have this oscillator as using price to sales ratio as an oscillator, making a divergent high. And again, back into that price extreme region, which really sets up for coming down at least towards the 2s, which would be very much in line with what we've seen in Microsoft and Amazon as far as a targeting region for that ratio to show signs of a bottom. Next, looking at IRBT. Whoops, typed in IBRT. This is an interesting one because the way that I looked at price to sales ratio, I'd already had the yellow count here, counting this as an A, B, and a C wave up for primary wave 3 in a diagonal, as opposed to the white count here preserving this as an impulse, which is certainly still valid. But when we switch over and we look at that price to sales ratio, we'll see why it made sense, instead of having the yellow count topping right here, that it seems like it looked a little bit better moved over for the top of that primary wave 3 moved over here, and counting this recent high as the B wave in the larger degree primary wave 4 correction. So either way, we're still looking for some additional downside in IRBT. Probably should get a bounce in the near term, taking it back up towards the 150-day moving averages. as resistance. Hopefully it's not going to eat into the gap. It'll hold under that earnings gap region and then set up for another move down. It's not yet clear if this is a wave 1 of the C wave or if this is an A wave in this wave 4. If it's wave 4 here, it seems a little bit small for the A wave, so it could be the A of a little bit larger A, and then it gets another B and a C wave down to get into this target region. But we're going to take a look more at the price to sales ratio and see what clues that can give us. So you'll see that the structure here, when I'm looking at, similar to how we were counting AMD recently, not AMD, sorry, Microsoft is looking more like a diagonal. This argues very strongly, even though the count on motive wave in price counts beautifully as a potential impulse, and this can be 1, 2, 3, 4, 5 still in the third, and then get another 4, 5. When we look at the structure of the price to sales ratio chart, we can see a clear 3-wave move up as an ABC for that larger wave 1, and then another ABC move up for the third of that wave 3, counted at primary degree. And then what was really interesting was this looks like a perfect Elliott Wave ABC flat, which argues very strongly for this being a larger degree B wave. So that fits very nicely with that yellow A, B, C structure for the fourth, as an A, B, and a C wave structure coming down for the fourth year. And lo and behold, that puts a fourth wave bottoming in this 2 to 1.5 region as far as price to sales ratio is concerned, setting up for a move, an actual move in line with the rest of the market on that 5 to 7 year rally, taking it back up towards the 4 and maybe extending past that to the 4.5 to 5 level, which is a prior price extreme that IRBT saw.